Hey, Todd Mackey here. Just wanted to touch base with you on the current system of our economic windfalls taking place. I won't say that it's all gloomy and all, spectacular. It is what it is. It's called, as far as the cryptocurrency markets are, volatility. Volatile. Super volatile. If you look at the area of Bitcoin and you look at the area of Bitcoin Cash and the extreme bounces that these currencies go through, there's a lot of manipulation. And I'll tell you that the big players have a lot of pull, and what they do is they collude and they figure out, well, maybe we can drive this price really high, and then once everybody else buys in because of their FOMO or fear of missing out, then we'll sell, because the big buyers will jump in, they'll turn the price on an upward parabolic curve, and then all of a sudden everybody's going to be like, I want in, and they start buying, and then once they realize that, hey, we got this momentum started, let's see how far it goes, those institutional players are sitting back like, you know what, I think that we've pretty much driven the market to an all-time high, and it continues to go higher and higher. Now let's say we'll pull out, and once they pull out a huge sum of money to where the market crashes, and it really just leaves everybody else in the dust, because they aren't the big players. Their little $5 to $500 investment really cannot drive the market like some of these major institutional banks that might have 500,000 to 5 million. It's really hard on these really small markets to determine whether or not they're going to do well because of the large institutional investors that are participating. I'd like to see it one day where you have a regulated system that, I can't say that it's going to be 100% regulated, or it would even be good if it is 100% regulated. I like the free market. I like the free market system that we have. But when you got guys that are huge players in there trying to just make all of this, fall apart, it kind of seems like if you don't have a lot of skin in the game and you're seeing everything that you've invested go down to zero, then it's really difficult, and I understand that. Whether there's a bottom, whether there's a serious point where it hits zero, there might actually be a bottom for many people, because a lot of people were not early adopters of these types of currencies. They got in when it was already at a very high level, and they've expected it to go up higher and higher. But those that got in early and got to see the rise of the value of the coins go up and up and up, they want to take profits. So what do? They take money off of the top, which is probably where you bought in, and now all of a sudden you're getting left in the dust because they want to take their profits. But if you were an early adopter and you got in when the market was, say, 1,000, and now it's 7,000, and those people that bought in at 1,000 want to make a couple 100,000 in profit, they'll go ahead and sell a majority stake of their holdings, and that would leave you in the dust. So the volatility issue is difficult. It's difficult to handle if you're putting big amounts of money in at one time, expecting to make big profits, especially after the market's already made a huge killing. Excuse me for a second. However, if you're an early adopter, you wouldn't really have much to lose, right? You just have your basis of what you bought in at, and see that kind of, once it's gone up, you'd see it go up, then you'd see it go down, you'd see it go up. You wouldn't have to worry about losing everything. It's not a bad deal. Excuse me. My apologies for that. I'm currently in the midst of getting off the always crowded I-10 corridor running out of West Texas. One of the great things though about cryptocurrency is that you can buy in on a daily basis with small amounts of money. I'm not a financial advisor, but I'm just giving you what I would perceive as the best option for me, and that would be, instead of going in with a ton of money expecting enormous amounts of growth over a short period of time, what I would rather do after seeing the type of volatility in these markets is buy in at a very low amount, and then once I get in, I can actually increase my holdings over a long period of time, so that, say I'll put $2 a day in today, $2 and tomorrow, and then $2 the next day, and so it would be averaged over the volatility of the market, so that I'll have the same amount of money going in every day, but if that amount of money goes down drastically, I won't lose a lot, but I'll still have a $2 buy-in on that time when it goes down drastically, right? So I'll be averaging the amount of money bought in over time, rather than trying to wait for a big buy-in at a low amount, and then maybe I get lucky, maybe I don't. So the dollar cost averaging aspect works a lot in every kind of market, and I would say even more so in these markets that are definitely projected to go up. So if you buy and you think that you got a really good deal, that's wonderful. But just remember that it could go down tomorrow. It could go down to zero. That's when you want to buy in. So that's why when you go to the dollar cost averaging method, it's always the safest way over time whenever you're buying into any market at any particular period of time. One other trading platform I use is called Robinhood. I don't like to buy that one. Excuse me, I got to decline this call. Looks like it's scam, likely. So one other method or trading platform you could use as well is called Acorns.
Don't agree with me, or maybe I've got some points wrong and you make a great argument and you articulate your point. I'm very likely.
These technological interruptions when I'm trying to explain the importance of what I'm talking about here with investing. I'm not an investment advisor. I'm not a professional. I just really like it. I love it to the point where I'll study it for hours on end, sacrificing time in what I could be doing watching television or whatever, and it could be to the detriment, whatever. The point is that if you have these other investment platforms like Acorns that you can invest a short amount of money, a small amount of money off of every purchase, right? Say you buy something for $5.50, they'll round it up to $6. That 50 cents will go into the Acorns account, and over time you'll get an investment off of every purchase that you make. It's a way of dollar cost averaging, and you can see really significant gains at that point, especially when markets are continuing to go up. If they're continuing to go down, you can still buy in at a really low price, and then once it goes up, you'll be able to say, I bought in at a low price, I bought in at a high price, I bought in at an average price in an uptrending market, therefore I did okay. You can't say you lost. There's a lot of theories out there that will tell you that this is the best way to go, and I'll say that it's a pretty positive method over time. I won't say that you can't lose, because you can always lose. That's one of the risks of investing, and it's one of the things that I like about it, because I like being scared. I like not necessarily being scared or nervous, but I like the feeling of, oh, could it do this? Could it do that? It's a great feeling for me because it keeps me interested. It keeps me wanting to know more. It keeps me active in learning. And the more I learn, the more I want to make larger investments. And the more I make, the more I want to put money towards what I learn about. So that feeling of fear or nervousness is actually a really good feeling, because if you span it out over a long period of time, you'll have a lot better opportunity to do well in the markets. And that's all I really wanted to share, because recently we saw Bitcoin Cash take a huge tumble in just a short amount of time, and we'll see if it survives. We'll see if the market recovers. But the point is that these are volatile times in a really early period of the currency, and us early adopters are going to see huge gains over time with this method of dollar cost averaging. So if you like my video, give it a like. If not, then give it a dislike. Either way, I appreciate it because it shows that you're listening and you care about what you've heard. God bless you. Thanks. Have a great day. I'll talk to you soon.